And so we're going into our next session, where I happen to now be playing another role as a panelist. And so I put us in the hands of Dawn once again.
Into our next panel then, and I will call Javargo back up to the stage. Also, Wendy Warren, the former executive director of the Bahamas Financial Services Board. So our panel now is going to talk about the banking system in particular, and we're going to take the global outlook we just had, factor in some of the risks, factor in some of the policy changes that could be made. So I'll turn to Javargo to get us started.
Thank you very much. And what we're going to try to do is to save you as much time to ask questions as we can. So mine will be short and Wendy's will be short. So in the Caribbean, generally, we are very reliant on international trade because many of us don't produce much of what we consume. So we rely on imports to furnish the needs, the wants of our society. The consequence of that is a heavy reliance on the international financial system, payment system. And that means having relationships between our local financial institutions and correspondent banking institutions to facilitate the trade that we are doing with the world. Some of the countries in the region have developed sophisticated international financial centers, like the Bahamas, where either through the management of private banking, trust services, and the like, we cater to some fairly high net worth individuals and have created for ourselves a sector that is a meaningful contributor to our gross development, to gross domestic product. For the Bahamas, depending on who you ask, if you ask Wendy those, they will say that that sector contributes 20% to GDP.
Popularity.
If you ask us, we might say 15%, or the answer is probably somewhere in between. But an important sector nonetheless. On balance, its average salaries outpace the average salary of any sector in the country. In the years leading up to 2000, the developed world decided that these international financial centers such as ours, these offshore centers such as ours, needed to be, I'm trying to use a delicate word, but we needed to be checked. Now, this is my interpretation. I believe the motivation was to do something about what they thought were tax leakages in these clients that our communities service. But it's hard to talk to the international community about assisting you in your tax collection. So it was better to talk about reining them in from the perspective of money laundering and the financing of terrorism. Of course, when you mention that, everybody goes, oh my God, we have to do something about that. And so leading up to 2000, a listing effort began such that you now became a either blacklisted country or a gray-listed country or some kind of country color that suggested you are a cooperative country in the fight against money laundering and the countering of terrorist financing. The listing was a devastating prospect for countries like ours servicing international clients, because many of them, no doubt, felt very nervous about being on a blacklisted country and what that meant for their viewing at home. So many of us, having been put on an OECD list, a Financial Stability Forum list, a Financial Action Task Force list. I mean, we had alphabet soups of institutions just raining in on us. And so in 2000, I happened to have been in government at the time. We had to come into compliance with these new and emerging international regulatory standards that called on us to get rid of things like bearer shares, and to have a registry that indicated who the beneficial owners of things were. And mind you, things that developed countries could do, but were not allowed in some instances for us to do. But nonetheless, vulnerable as we were, and among the vulnerabilities that we faced was the prospect of what could happen to our correspondent banking arrangements. And I like to say, just as you'll hear more of this from Wendy, as a practical issue. If you have a student in the United States of America to whom you had to make a transfer of funds to do whatever they had to do for their education, the absence of a correspondent banking relationship could be devastating to that, the ability to service your child's educational needs. So we, in a frenzy, passed legislation, created regulations that had an enormous impact on the financial sector that we had developed over years. And while we may have thought that that was a one-off and that was all we would have to do, we have been in a battle over this moving target for 23 years. 23 years. Every year, we are wondering, which list am I on today? What color am I today? And it becomes a challenge for both the public policymakers and for the private sector individuals who have to service their clients and try to maintain a business that's viable. And so that's where we are today, in a continuing attempt to remain compliant with the emerging regulatory efforts. And we have to date been successful in overcoming much of it. So when sometimes we want to ask ourselves, are you tough enough? Are you resilient enough? Are you flexible enough? Are you adaptable enough? We've been all of those things, and continuing to be vigilant in respect of how we proceed. I was a policymaker, so I had to deal with this issue from a government point of view. I was the minister responsible for finance, responsible for the financial services sector. So being deeply involved with this, I flew all over the world trying to negotiate arrangements between the Bahamas and other countries enough to get us off a list. And then one time when we did it, I came home and we were triumphant before we went on another list. It was an adventure, and it continues to be so. But again, thankfully, both the public and private sector working together has been able to endure to this extent. Now, at a more granular level, Wendy has been dealing with this issue both as the person who ran the Bahamas Financial Services Board, which is the body that represented the private sector in that arena, and now herself as an entrepreneur in the area. So.
Wonderful. Good morning, everyone. It's a pleasure to be here. And as Shivago mentioned, really looking forward to dialogue, because I think it is such an important topic, and I think we can use these environments to learn from each other on how we could move forward, because it certainly isn't over. But I sort of thought about this in 4 key categories. One is the backdrop. Why is it important? Why are we talking about this? The second is the cause, much of which Shivago has spoken to, but I just want to highlight a little bit more about it. The consequences, and then perhaps the way forward. So from a backdrop perspective, Zhivago spoke about it from an individual Bahamian, which of course as a politician he has to ensure he thinks about the citizenry and how they engage. At a business level perspective, and those of us involved in financial services, we have a number of people here involved in the business. I equate this to having a business without internet. Imagine any business without internet. You're dead. I mean, you can't even talk to your customers. They think you've lost your mind. Well, banking and financial services without corresponding banking is akin to not having the internet. Okay, so this is hugely impactful. And it's impactful in the industry in three key segments. One, directly towards banks. Banks need this to deliver their core services. They need this to expand. We have lots of discussions about fintech, et cetera. How do you even do any of this if you can't access the rest of the world? You have the ability to leverage and offer clients additional services. And then you have employment, which drives the economy of the Bahamas, right? So banking certainly was a major source of employment in the country. But what we have is a step behind the banks, or what I call financial services providers that are not banks. There is a whole army of businesses that thrive around the banks, and their businesses are impacted. I remember there was actually a new bank that moved to the Bahamas, and they had difficulty finding a bank that would provide payments of salaries because of this corresponding banking issue. Like, okay, you are regulated by the central bank, but you cannot find someone to actually process your salaries. So the spin-off impact around businesses around the financial services sector. We have trust companies. You have fund administration companies. If your clients cannot find banking services in country, now those businesses have to go cross-border. So the clients are like, why did I just come to you for you to take me somewhere else again? Your value proposition is challenged and weakened. Then you have the clients. I always refer to them, it certainly was at the Bahamas Financial Services Board, these are mini foreign direct investors. Because the size of the clients that we see here are not your retail clients generally. These are persons who are going to make broader impacts into your economy. They buy a home. They come here and spend time in the hotels. They don't spend 2 days or a weekend. They may spend 2 weeks, 3 weeks, a month. So there are many foreign direct investors in your country. But they come to see you, and you send them somewhere else for banking. So, they come from economies and locations where they have an ecosystem that works. And even the structures we offer are compromised. We have segregated accounts companies. Our laws specify what a segregated accounts company. If you start banking for these entities elsewhere, you're now exposed to what their laws say a segregated accounts company is, or trusts, et cetera. All of these things make it far more complicated. So the strength of the financial services sector is really about having an ecosystem that works. And the more that we pull away from that and segment and weaken the ecosystem, you then start to look like what the international community accuses many of, being a booking center. And then when you're a booking center in an age of substance, why do you exist again? So this is this consequential sort of a value proposition, place in the world that corresponding banking sort of shakes at its foundation. So that's the backdrop for us. This is what we live with every day. Now, the cause, of course, I agree. In many ways, yes, there was a heightened attention on criminal activity, risk of money laundering, that then evolved into the risk of terrorist financing. But we can clearly see that those questions were addressed years ago, but we're still on this track, where certainly points to either the track was proven to be so fertile that it was expanded to a multi-pronged approach, or really ultimately there was a wider scope that we're now really sitting within that scope. And at the heart of a lot of these discussions, it's about the question of risks of tax evasion, but really it is about the integrity of others' tax regimes, policies, and systems. And I think if we begin to really, which is going to be a bit of part of the way forward, if we can have, I think, more clarity and I'm going to use the word transparency on the concerns, then we can address them proactively. But these concerns really led to an approach of wanting to what I would call centralize and control mode. Centralize and control by one, the blacklists. Here's a way of discouraging quality clients from going to certain places, because why would a quality client want to be in these places? Then secondly, an attempt to reduce the number of financial centers, because the fewer you have, the more you can manage, the better you can manage. And third, the number of banking and financial institutions generally. So that's the environment and the sort of, the way I think the global community looked at us. The consequences are enormous. I mean, certainly the correspondent banks we sympathize with and we understand, they face the global backlash when they're fined for any number of things, most of which have nothing to do with us, by the way. If you look at the fines global banks face, you look at the number of times that involves an offshore center, and it will be minuscule, right? But of course, the correspondent banks feel the pressure and they want to mitigate this, and we respect that entirely because we feel the pressure and want to mitigate it. So we're on the same page. But then the impact is that in the economy, it doesn't matter whether it's an indigenous bank or a global bank, you're faced with the cost of doing business, the risk of doing business, and the risk of being de-risked even from within your own group, right? But the barriers are far higher for indigenous institutions because there's no comfort that these indigenous institutions are really doing what they're doing. They're not having their head offices. The home supervisor is not one of the major supervisors. So I think it has an impact on the economy of creating friction, reducing the integrity and the contributions of financial services to the economy, which we know many persons have been educated through this sector. It adds the real sort of wealth into the sector, the local economy. And I think it creates a huge sense of uncertainty as a country. The clients of the banks are uncertain as to whether they'll have the service provided. They don't know whether next month the corresponding banking relationships will be detached. Persons in the sector live with stress and risk. And then the whole economy faces the risk of contracting. And I think that's partly why governments also just almost throw their hands up and say, we are not going to manage this. This is beyond our control. Therefore, you guys are on your own because this is a no-win situation. If we attempt to do right, then we're accused that we didn't do it properly and you caused the jobs to be lost. And so maybe we just sort of just fade into the sunset and just recognize that this is a consequence. I'm not saying that governments are doing that, but it's a very easy route for them to take because they do not have a sense of control over this sector. Now, the way forward, just some thoughts. I think the reality is we do start with a challenge that we perhaps attract less than quality clients. And a lot of these views have been embedded for decades. And I don't know how, but I certainly hope the level of engagement that places like the Bahamas, Cayman, Barbados, many of the smaller centers having undertaken with respect to monitoring and reporting demonstrates that this risk level is not as high as perhaps they anticipated. So what do I mean by that? The Financial Action Task Force placed the Bahamas after it went through its review of its standards, and we were one of the first countries to be reviewed under the revised model. We were placed under extra scrutiny. And the Bahamas worked incredibly hard. I take our laps because we're now 40 out of 40. We are one of the 6 countries in the world to achieve full compliance with FATF standards. This is not easy, so we're going to celebrate it while we're there. But I remember we spoke with the FATF and we explained to them what we have to do for our clients. Every year, we report all of their balances. We report the transactions when they've taken money out of the system. We report the economic substance. We have registers of beneficial ownership. I mean, there's unending amounts of reporting. And then for certain markets, we actually report proactively to their central banks assets they have outside of the country. Okay, what else do you want? And it's fine if there's something else, we'll engage. But can we step back and just acknowledge and perhaps lift the swing where all the weight isn't on one side of the sector? Let's equalize this and perhaps bring parties to the table where there's a level of engagement, a level of integrity and understanding of where we're all coming from. So I think that's really important for the way forward. It's not about, let me frame it this way. When you have an undertaking or a business, it's not about risk elimination, or else you may as well just go home. It's about risk management. So if it's about risk management, let's understand the risks in the system, in the sector, and let's better manage it, right? Monitoring and reporting, key. Certainly, I think that the sector in the Caribbean have demonstrated that we're prepared to engage. Yeah, we sometimes get a little angry and we want to be upset, rightfully so sometimes, because it is uneven, it is unfair, but we are engaging. So I think for me, it would be really wonderful to understand, ways in which we can listen, hear views, be proactive, maybe explain why some risks are not the risks they're identified as being. And yeah, I think that's really, for me, the way forward. This industry is too important to lose. The consequences, certainly for our economies, are significant and would be highly unfortunate. So I'm always going to push and fight to find a way for us to continue to thrive. So thank you very much.
Wendy gave you a very in-depth, detailed look at what has to be dealt with on a day-to-day basis by the businesses that operate in this environment. Let's suppose I'm right, that this was always a tax issue. The truth is, this is not an issue driven by policymakers in the developed world. This is driven by bureaucrats, for the most part, technocrats, who have been pushing this for a very long time, who, depending on who the policymaker is at the time, they have more or less ability to push it. So Wendy was asking what could be done, and I agree with the dialogue. But at the technocratic and bureaucratic level, where we have found some better ways to help people understand who we are, is where those people interact with our folks who can say, you're wrong on that point. We do not operate that way. We do not do that. And so there has to be this exchange where the world sees us differently than they have become accustomed to seeing us. We are not just a tourist destination. We happen to be a very sophisticated group of people with highly expert professionals trying to create a modern economy that isn't simply trying to live off people on our beaches. And when people come here, let me give an example. I could go to the United States right now, and in 20 minutes, I could have a bank account. 20 minutes. That is impossible for me at home, and I am a former Minister of Finance. And because I'm a former Minister of Finance, it's worse for me, because I'm a politically exposed person. What they put me through, my bank asked me for information to know your customer. I said, I've been your customer for 20 years. But that's the requirement, you see? And we suffer rigors, scrutinies in our financial jurisdiction that most developed country clients do not. Yet, some technocrat looks at us and says, you got to be careful of those people over there because, they're very unsophisticated. But that's not because they want to be. It's not because they're malicious. It's because they're ignorant. They just simply don't know. And so the more exchanges we can facilitate, as Wendy said, both at the technocratic, bureaucratic, and political level, probably the better off we will be to expose something. Now, Wendy didn't tell you all this. You didn't hear this from me. Republicans tend to have had, over time, a very intimate relationship with countries like the Bahamas. They tend to know us better in some ways in the financial services sector. In other ways, other administrations or groupings have not. And so it's no wonder that sometimes, I'm not speaking theoretically, some of the movements we have seen on this issue happen depending on the administration that was in office. That doesn't give us a preference for an administration. It's just a recognition of the realities of who knows us best. And so we have a job to do sometimes to help all sides understand this country and our region better. And so that's on us. Maybe you can help with that.
Zhivago, could I ask, when you're dealing with technocrats or bureaucrats, do you tend to deal with the same individuals, the same people over time, or do they change?
And that's one of the keys, is they tend to be the same individuals. Mind you, some of these people have had this project going for years, just waiting for the right political policymaker to help, to hear, to want to do something about it. And that fermented for them around 2000. But yeah, they tend to be the same people. So what we try to do, and less successfully, is to have an enduring group of technocrats on our side who form a relationship with these people. Sometimes we haven't done as good a job as ensuring that these people stay in place so that they could keep fostering that relationship, but that's one of the things that we need to do better.
Yeah, we want to leave some time for questions from the audience. Maybe I'll open up the panel here.
Good.
I see lots of people from the industry, so you might have some views that you wish to share.
I'll go ahead and break the ice in that perspective. Speak like the mic came to me.
And you might want to introduce yourself.
Good morning, everybody. My name is Nakia Horton. I have the pleasure and honor of stepping in a role that Wendy once held as the CEO of the Bahamas Financial Services Board. And so I'm very grateful for this topic this morning. And so I say thank you very much for that history and that outline, because I think it's very, very important that we have an appreciation of where we are today and where we need to go. And so now, as I'm taking on this new role, I'm very, very keen and sort of bullish on how do we move forward and how do we grow the industry now, considering all of the regulatory and compliance issues that we've had to navigate through. And I would just like to put on the record, I think the Bahamas has done a fantastic job in doing that. I don't know that there is another jurisdiction that is as agile as we are and flexible in terms of meeting all of those hurdles that are being placed in our way each and every day, as Mr. Lang would have highlighted. So to that extent, and I think you may have touched on it already in terms of moving forward and having intentional and productive conversations, but how now do we grow? How do we change definitively the image of the Bahamas from being a country that has been labeled as a tax haven, as one that facilitates money laundering to some extent? We know this not to be the truth. But how do we rebrand? How do we now rise above the noise? And I would really like to draw on your expertise in that respect.
I think there's several ways. I think we have to change the way we approach, or be more clear in the way we approach the topic. I think if you look at corporate entities, the central bank, all of our regulators have a very deep demand for risk management. And I think countries, sectors, have to find ways of communicating levels of risks and how those risks are being managed. And of course, we have the national AML assessments, these sorts of elements, but I think we should take a very proactive and broad scope of what are we doing, and communicating factually, where do we see the risks? How do we rank them? What is being done to mitigate those risks? Because I think we only respond to questions when they arise. We're not, which is what the regulators ask of every institution, right? Undertake a self-assessment, a formal self-assessment. And we have all the professionals who can do this. This is what, KPMGs, the E&Ys, et cetera, do. Should we not perhaps start with one of those where we undertake a self-assessment? I think that's something, because then it can be updated every year. So you're beginning to track your performance, and it has to be frank. And that's the only way to move forward. If we, sort of say that we're perfect, we're not. The risks are evolving every day. So I definitely think that's something we can do. And perhaps we can have others who join in with us, major centers. I think explaining the part of this in a risk assessment, you have to explain what is your business. Understanding the business, for example, in Barbados is far more institutional because they rely a lot on a tax regime that brings institutions to Barbados. That's a different type of business than the Bahamas and Cayman, where we have a lot of private wealth persons coming through. And if you have large private clients, you often undertake a detailed onboarding process. So the number of STRs, or suspicious transactions reports, that you might generate in a market where it's an institutional base of clients versus a market of ultra-high net worth that have been highly screened versus a retail base of clients will be different. And so you cannot just look at the number of STRs. It has to be by grouping, by type of client group, by type of business. So I think we have to begin to map ourselves in a way that helps people to understand who we are. So that's just a thought.
And if I might just quickly say, I think there's also the need to think about the business itself. Forget for the moment the regulatory regime. Think about the potential clients, because if it's growth we're talking about, think about potential clients. Much of the world's wealth is being transferred to a new generation of persons. They have different views about how the world should work, how people should interact with their money, how they should interact with the world. And so we have to have language and ways of reaching them. We're not talking to their parents anymore. We're not talking to their grandparents anymore. We're talking to them. And they may need a new introduction to ourselves because they don't know us. They know their parents and their parents' parents' relationship with us. We now have to have a relationship with them.
Wendy, could I ask as a follow-up?
Yes, I'm Paul Horn, a retired international economist for an American investment bank, having spent most of my years in Europe, where there's always been a rivalry between the European currencies and the dollar. I'm bemused by your one-to-one parity in the Bahamas. And do you feel yourselves yanked around by American policy? They go sometimes at odds with the policies you would like in the Bahamas?
Actually, the relationship is so seamless that if we were being yanked around, we wouldn't know it. The reason for that is most of our spending is in U.S. and most of our earnings is in U.S. So we in the U.S. are one. Really, in truth, the Bahamian currency is a pride symbol. It's not we could dollarize, Governor, right? and not miss a beat. So no, we don't feel yanked around. But of course, depending on what the dollar is doing and our trading with other parts of the world outside of the U.S., the commercial entities might feel that yanking a little bit more.
And this isn't your question, but just as a point, I mean, as Shivago mentioned, we have, I would say, closer connections to the U.S., but I would say Europe has a much more proactive and sustained policy development, proactive policy development. And we find it challenging, I think, to have Europe that creates a lot of these lists. The U.S. is really not even noticing the list. I'm using that point, exaggerate the point. But our clients are from the US, but yet we have to follow Europe, because otherwise we're going to appear on a list somewhere. So we feel that conflict from an operating perspective. So for example, you have the minimum global tax is being introduced. Europe is well ahead of the US, but we are, closer to the US, but yet Europe is sort of, leading the world in these discussions. So I think it is a dynamic we face as businesses.
Wendy reminded me of something because I was, we're sometimes referred to as tax havens, no tax jurisdictions, which is awfully untrue because if you live here as we do, try and buy something out of the food store and see the price of it. Now, that's all reflective of tax add-ons, right? But I was very intrigued when Paul Ryan was Speaker of the House of Assembly, and America did a corporate tax cut. And they were boasting about how they lowered their taxes to be more competitive with Europe. I was like, wait a minute, it's okay to have lower taxes? Because when we have lower taxes, it's a problem. Think about that contradiction, right? And so it becomes a challenge every day to rationalize some of what we are confronted with and what happens in the world.
Hi. Yeah. Leslie Archer, Policy Fellow at the Government and Public Policy Institute. So I just wanted to bounce on Ms. Warren's and Ms. Horton's feedback. With the anti-money laundering, I've attended the anti-money laundering conference for the past 4 of the 5 years that it started in part with Central Bank. And it's obvious that it's subjectively driven as we are trying to establish more empirically grounded means. And I do feel that the Bahamas sometimes places itself at risk by choosing to focus on rebranding per se, because it's in essence to responding that's something that's already subjective. And that's likely to change. And sometimes I wonder too, I think the missing arm in terms of International Finance Center of the Bahamas is the academic part of it. Where is the think tank? We had an International Financial Center from the 1930s that established here. The academics driven that are writing there is a plethora of publications coming from the global north telling us who we are and what we should be, and we attempt to respond to that. There is a wealth of lists being generated, but what is the academic response or the academic birthing in a way, because that's where ideas are birthed and can become substance, and that is the area that we actually, I think, missing. If we look at the public sector, we have the private sector involved. We need that third arm to be strengthened here. So I want to share that, and then just to say, focusing, well, we need to brand, or we need to restructure or figure out how to get away from this tax. You could get targeted for being a tax haven one day by America and then targeted for being something else if you change your name for being an offshore. And that's because that's your political play. Like, your objective is to gain wealth for your country, just like our objective is to gain wealth for our country in the best interest of our persons. Capitalism, global, and let the games begin, right? But we don't fall into that pit. We have our own strategies. It's probably not the right audience to speak to, but I'll represent my country. Thank you. My pleasure.
So we're just about out of time on the panel, but if there's any quick... One more.
My point, I think, follows that pretty strongly, because I think what y'all are talking about is a critical piece to the Bahamas' ability to kind of direct its own future. So I'm from the not-for-profit sector. Because of the FATF concerns that relate to places where not-for-profits are particularly vulnerable for anti-terror or terrorism financing, we had a relatively draconian law put upon us, and all of our organizations had to adjust and change. Even not-for-profits now that are mobilized under our Companies Act still have to go through beneficial ownership reporting, which is, again, doesn't make sense. And so adopting and pushing for a more risk-based regulation structure is key. But it has bigger implications for us. Because of this structure, Our government spends a lot of time, our elected officials spend a lot of time debating and passing laws to try and keep in front of these things. Something happens and then you have to react to it, which prevents time and energy put on development of the more domestic policies. Those domestic policies don't come to fruition in a 5-year term. The public steps up and votes one administration out, and all of a sudden, those relationships fall away, the structures and the momentum falls away. So it is absolutely key that this becomes something that we regionally push forward on, because it is our ability to sustain. It is our ability to be resilient.
Let me, on that note, say I'd like to thank our panel and the audience for a great discussion. Please join me with a round of applause.